Hello, everybody. Welcome back to Sacred Valley. I'm Tara Crete, your host. Today is, what is today? January 11th, Tuesday, 2022. Today we have Kirk Elliott, PhD of Private Advisors. We're going to discuss a lot of things, but we're going to discuss with Kirk the seemingly inescapable economic situation that's approaching and what everyone can do, Kirk, to help protect themselves and their family. Welcome to Sacred Valley.
Well, hey, it's great to be with you. So thanks for having me.
Welcome. So psyched because you're an expert in this field. You know, you've been doing this for what, almost 30 years, from what I understand.
Mm-hmm.
So you're the guy to talk to. I've been into gold and silver for a long time. I was buying it back in 06 and 07. You know, with all this inflation that's going on, Kirk, and all this stuff, brandonomics isn't really working. It's just not. I think people are starting to realize that. Inflation is higher than it's ever been. This is a lot of things going on. So why is silver still at $22 an ounce right now?
Well, it's been manipulated for a while. There's no doubt. So, but why is the manipulation? You know, as an economist, I never like to look at things as face value. I always want to ask why things happen, because once we understand the why, we can actually be in the right place at the right time with confidence, right? So when you look at things like manipulation in the markets, we've been hearing about that for over 30 years in the gold and silver markets, you know. But is it because banks hate it or because they love it? I'm referring to silver right now. Well, it's because they love it. They absolutely love it. So they're shorting the markets, like the big banks, Bank of America and Chase in particular. And when they short it, it's because they want the price to go down. Well, why do they want the price to go down? Because Chase, JP Morgan Chase, is the custodian for the silver ETF. Right. So silver ETF is the paper version that people buy in 401ks. It's not actual silver. Don't get trapped into thinking it's silver, because it's not. So when they're the custodians of it and they have to buy ounces to back that ETF, do they want to buy at high prices or low prices? No, they want to buy it at low prices. Right. So when they issue short contracts, it drives the price down. They gobble up a bunch of physical silver. Then that demand causes the price to go up and they say, oh, it's too high. Let's issue more short contracts. It goes down. They buy more gold, more silver. So it's because they actually love silver, not because they hate it, right? But here's where earlier this year in March, Reddit stepped in, right? Remember Reddit from the whole GameStop thing, when they took it to the hedge funds in January, and they said, hey, every individual investor out there that's reading Reddit here, we're going to start a short squeeze on GameStop. So what they did is they got all these investors to gobble up GameStop and stick it to the hedge funds, because again, hedge funds are manipulating the market. And I saw an interview by the CEO of Reddit, and basically to them, it's almost like a holy war. It's like a jihad. They don't really care if they made profits. They just wanted to stick it to the hedge funds for manipulating the system, right? So what did they do? When they got all the clout of all those individual investors behind them, they realized we can beat the big boys. And they caused GameStop to go up 1,600% in 1 month, in 30 days, right? So then they decided, hey, we're going to institute a short squeeze in silver, right? So now they're doing the same thing. And what GameStop told all of us was that these people have clout, right? They can pull the masses in. And see, when the banks have these short contracts, they have to provide physical delivery on the other side of it, right? So when individual investors coming through Reddit and other people around the world, it's not just them, are buying up all this physical silver, and there's very little left, when JP Morgan Chase, when Bank of America has to fulfill those contracts and there's no silver available, boom, prices go through the roof. That's just economics 101. Low supply, high demand causes the price to rise. That's what we're living in right now. But the reason why silver is low, I know this is an extremely long answer to your sweet, short little question, but I wanted to put it into perspective. The prices are low because they've been manipulating the markets. But the COMEX deliverable silver is at an all-time low. So when they run out, silver is going to soar. But even with manipulation on the markets, Tara, it's not like it's been terrible. Silver's still up over 40% over the last 16 months. When you average it out since the year 2000, so for the last 21 years, Silver averages 11.7% a year, even with manipulation. Imagine what it's going to do without manipulation, right?
Right.
Sky's the limit for this tangible asset.
Are we really going to see that though? Because I think I've heard numbers like silver should be at 600, gold should be several thousand per ounce. I mean, do you really think we're going to see those numbers one day?
I do. With the inflationary pressures that we're seeing, like to put it into perspective, we've all heard of hyperinflations in Venezuela, things like that. They have 1,000,000% inflation a year, right? Assets go up with inflation. I don't care if it's real estate or cereal or oil or gas or gold or silver or groceries, right? When inflation persists, prices go up. Gold and silver is a thing, just like all these other things are things. Well, how much is inflation going up? Well, under Brandonomics, in November alone, the rate of inflation officially went from 4.5% to 9.8% in 1 month. That's 117% increase in the rate of inflation in 1 month. That's Venezuela style inflation growth. So we've got in front of us a massive inflationary spiral that we've only seen the beginning of because our stupid presidential administration can't or won't stop printing money.
I think it won't. I think it won't. And we also have this astronomical debt. So if you couple inflation with debt, that's devastating to the American people.
Okay. Plus one other thing, because with debt, people have to pay it back, right? So now because
not if it's college debt and if you're a liberal, apparently.
Well,
but
that's true. That's
just a little side note.
Yeah, side note. But everybody else has to, right? So when you've got all this debt and America is shackled with debt, including our national debt, $29 trillion, right? Mm-hmm. We've got the lowest interest rates in the history of the country. This is why for 38 years, the Fed has been reluctant to raise interest rates. Because if you raise rate, it's in a world that's shackled with debt. It's going to pinch everybody living at the margin, which is sadly most of America. We're living hand to mouth, month to month, right? And if you start raising rates, it's going to increase people's payments on all their debt. So they haven't done it. But now, for the first time in 38 years, since 1983, outside of a short stint in 2018, rates are now rising. Jerome Powell, chairman of the Fed, 3 weeks ago said, hey, we're going to raise rates 3 to 6 times in 2022 because we need to slow down inflation. So what did he just say? He said, raising rates that would actually kill the economy overnight is actually secondary to the inflation that we've caused by printing money to actually pay people to stay home rather than creating a framework of success where you encourage people to work where they spend real money, right? So when they just print and have stimulus plans and build back better plans and infrastructure bills and trillions here and raising the debt ceiling by trillions, it's like, oh my word. So all that money doesn't grow on trees. They actually are printing it, right? That's inflation. And that's what they need to slow down. So for the first time in 38 years, they've said, we're going to raise rates to slow this down because it's more important when people are faced right now, and this is not even an exaggeration, should we feed our family or should we pay our rent?
Right.
Because prices are going so high. It's like they've got to slow that down or else we will turn into Venezuela. So now they've actually drawn a line in the sand and saying we're going to raise rates. That will kill the economy. That will kill the stock market. It'll kill the bond market. And these inflationary pressures with stagflation and a slowing economy, this is not good. Thank you, Mr. Biden, for bringing this on us, communist America, where all you do is print money to fund your stuff. And it's like, oh, well, let's actually pay for it with higher taxes. It's like, well, that doesn't work either, because with higher taxes, when people are already living at the margin, they're just going to spend less. So government revenue actually goes down. Everything they're doing is opposite of what it should be.
We're on the precipice of a financial collapse. We have been for a while. It amazes me how far and how often they can kick the can down the road, though. It really does. Because once you think, okay, this has got to be it, there's nothing else they can do, they go and do something different. They create the sickness and then they create the medicine for it. But the medicine actually makes you sicker. It kind of reminds me of chemotherapy in a way.
Right.
So we're talking about America now, but what about what's going on outside of our country, Kirk? Like what's happening with Evergrande, the real estate company in China, the oil-rich country of Kazakhstan, we have Russian troops on the ground over there, which started out as just peaceful protests over the gas prices. But that seems to be affecting the rest of the world as well.
Well, it will. And see, we got to watch Kazakhstan. To me, this is just a microcosm of what's going to spread around the globe because of inflation. I mean, that started because the rich oligarchy with the oil guys, right, and gals, they're making money hand over fist.
They're one of the wealthiest nations in oil in the
Yeah,
world.
yeah, they are. And nobody even knew it. Central Asian country that nobody can even pronounce. Why are they so wealthy, right? But it's oil money. So then you've got the masses there saying, the rich are too rich, we're too poor, we want some of that. So now it's an uprising. This is what inflation does around the globe. So what we're seeing there is probably going to happen here. It's probably going to happen in London. It's probably going to happen elsewhere too, right? I think they're testing the water, so to speak, to see how this can be a game-changing moment into a globalist utopia, socialist world, right? I mean, where everybody is equal. I mean, this is where I see this going. So, but that's one thing. That the other thing that we're seeing is Evergrande. There's always bubbles that burst, right? Like in 2009, we saw the subprime lending bubble burst, and stock markets collapsed. In 2000, you saw the tech stock market bubble burst. It's not that these are uncommon things. They happen, right? It's when things get overbought, they have to correct. Well, what's the pin that pricks that bubble? Well, this time, I believe it could be rising interest rates, because that'll kill the bond market. With debt that we have in this nation, that'll kill the equities markets because people are going to spend less. And the stock market is a function of revenues. That's all it is. So when people spend money, corporate revenues go up, which means earnings go up, which means stock prices go up. So when we stop spending money, the absolute opposite is going to happen. Stock prices will come down. But also Evergrande. Okay, we'll connect some dots here, right? So what's the largest real estate country in the world? It's China. What is the largest company in that country? It's Evergrande. What is the backbone to the global bond market? The Chinese real estate market.
Now, let me ask you a question. Are you including the real estate that China owns in the United States or just in China?
Just in China. Okay. I mean, I'm talking about just in China.
Because they own a lot over here, reportedly.
Oh yeah, they're getting out of the yuan like there's nobody's business, and they're investing it elsewhere because the Chinese economy stinks worse than ours, right? So then what is the backbone of the global's derivatives market? The global bond market, right? So as Evergrande goes, that'll affect the global bond market, which will affect the global derivatives market. That could be the biggest pinprick that we've seen that will actually cause this to explode. So is it happening, right? I never want to advise somebody on an uncertain future outcome, because either I'm going to be right or I'm going to be wrong, and those are Vegas odds. I'm never going to advise somebody on Vegas odds. So therefore, I'm going to advise people on what's right in front of us right now. Well, right now, as we speak, Evergrande can't make its interest-only payments. They've missed the last 3 months, 150 million, 200 million. I mean, they're missing those. So what makes us believe that in March and April, they actually don't have interest-only payments? They have principal payoffs of these bond issuances, which in March and April alone is $3.6 billion. So when they miss that, there's over 170 U.S. banks that are going to be on the hook for this, which the U.S. banking system and global banking system is already strapped for cash. There's already a liquidity crisis happening. In fact, the Fed took $2.5 trillion of liquidity out of the system about 8 weeks ago through a reverse repo mechanism, is what it's called. Why would they take money out of the banking system when people need it the most? In a post-COVID world, right? Whether we have it or we not, I don't even have any idea. But it depends on who you listen to.
They're up to something, I'm sure.
They're up to something. And see, they're creating an end run around private capital, around the banking system. If banks don't have money, well, then where are people going to go when they need it? Oh, directly to the government, right? So all of this, when you start connecting some of these dots, it paints a really weird picture.
It does. And so that leads me to believe that, we've got the derivatives market that can be on the brink of collapse, the equity market, the bond market. But what about the housing market here? Because that's not going to stand on its own if everything else starts collapsing.
That's all a function of the interest rates. So interest rates and jobs are what create a solid real estate market, right? So when you've got people that aren't working, You're paying people to stay home. They don't really have good income. Oh, they can't afford a big house. Okay, now you start raising interest rates. Then all else being equal, if the cost of borrowing goes up, because not many people pay cash for houses, right? So they have to borrow.
They do in
So
my
an
town,
interest,
but
well,
yeah,
there's some
I
places
live in
where
a very
people,
wealthy zip code.
yeah. Oh, I mean, older retirees sometimes pay cash for houses. Younger people never do, right?
Right,
So,
right.
so when people are buying houses, they have to finance them. So when interest rates go up, it means they can afford less, which means the housing market has to come down just out of market forces to competitively price your house. It's something that people can afford. Rising interest rates is not good for a growing real estate market.
No, not at all. And this real estate, I'm an agent where I live, and I've been an agent for a long time, but this was like a real market this time. It wasn't like '08 when it was just this collapsible air-filled bubble. This is where I live in Florida. People are moving here. I think you're in Arizona. Everyone's flocking to our states. They want to be here. There's real value in what people are doing here. But if you have these interest rates rising, like you're saying, and if you've got money sitting in the bank, Kirk, sometimes I wake up and I just check my bank account because we could be like another Venezuela. I had friends whose parents literally in the 80s lost everything. They woke up one day, they went to the bank, the doors were locked, people were outside, they lost everything. And they're still working now in their 70s.
Yeah.
And that scares the daylights out of me. So I buy gold and silver. I just bought some silver from you last week. But you know what I'm hearing? So there's a lot going on. You've just gave us some really great explanations as to, how this could all be happening. But right now we still have a unique opportunity of buying silver at a really good price. It's almost like it's extended. So let's take advantage of it.
Well, there's a time and a place for everything, right? And so I'm a firm believer that there is no such thing as a bad investment. They're just bad timing for investments. There's a time when real estate is the best thing ever. There's a time when stocks are the best thing ever. There's a time when gold and silver are the best thing ever, right? Well, what causes that? Policies out of Washington. So every investment we have is going to go up or down because of policies coming out of Washington. So in the Reagan years and the Trump years, two defining policies: lowering interest rates, lowering taxes. That decreased our cost of borrowing, increased our bottom line because we got to keep more of it because we didn't have to pay so many taxes. And so we spent. So during those times, really the stock market was the safest asset in the world because it just kept growing because of strong fundamental forces causing its growth. But fast forward to today under Brandonomics. I love that word, by the way.
I know. I came up with that earlier. Thank you.
Yeah, good job. Yeah, it's awesome.
You can use it. You can use it all you want.
All right. Thank you. I will. You didn't trademark it yet?
Not yet.
Okay. All right. All right. You should. All right. So anyways, under Brandonomics, we've got rising taxes, rising interest rates. Therefore, completely opposite policies will have an opposite outcome. Wouldn't touch a stock market with a 1,000-foot pole right now.
Right.
Wouldn't touch the bond market with a 1,000-foot pole right now. But what would I touch? Gold and silver. Because what causes them to grow is inflationary pressures, political chaos, and unsustainable debt. Do we have all three of those? Check, check, check. Yes, we do. And I don't see any of them changing anytime real soon. So therefore, the trend will continue on with gold and silver, and we gobble up as much as we can. Prices are poised to soar. They're not peaked out like the stock market is. They're going to go up for years to come because of these inflationary pressures that we're seeing.
So I just thought of a good question. I was talking with a good friend the other day, and she brings this up quite a bit. Her and her husband love the idea of buying gold and silver, but what they don't like is paying a surplus. They don't like that they have to pay a fee on top of it. And I didn't have a great argument because I'm just like, just buy gold and silver. I mean, look, I have my gold and silver from 12, 15 years ago, and it's worth way more. So what do you say to someone who goes, yeah, but there's a 5, 10% surplus that I have to pay over it, so it doesn't make sense to me?
So you always have to pay something over the price of the raw price of it. Like in real estate, right? 4% when you buy a house, 4% when you sell, or 6 and 6, whatever it is, right? Whatever you can negotiate. In the precious metals world too, when you purchase, there's a cost of ownership. When you sell, there's a cost of selling. Not with us though. When you liquidate with us, we charge 0. So whatever the depository is paying for metals on the day that you liquidate, you get 100% of it. We charge nothing when you liquidate.
That's extremely unique. I've been doing this for a long time. I've never come across a company that will offer that, by the way.
Yeah, I mean, I haven't either. And I've been doing this for 27 years. We are unique in that. And see, here's why it matters. Let's just say, and I'll use an example here. let's just say you could buy metals at 4% when you buy it and 4% when you sell it, right? It's a total of 8%. So if you had $100,000 invested, it cost you $4,000 to get in, $4,000 to get out, if the price of the metal didn't change.
Right.
But nobody invests in something to have it stay static. You're expecting it to grow. So what if it doubles? What if it goes to 200,000? 4% on the back end is 8,000 now, plus your 4,000 that just turned into 12. Well, what if it triples? Well, now you pay 12,000 on the back end plus the 4,000 up front, right? Zero, where we do zero is zero. I don't care if it goes to $1 million, it's still zero. Now, when you purchase from us, it's a total of 8%. That's the total cost of ownership. Depository fees, our fees, everybody, it's 8%, right? So that means once gold or silver moved 8%, you're relatively break even. Everything after that's pure profit forever, because we charge nothing for fees for assets under management. We charge nothing when you liquidate. That's a huge thing. I'm telling you, the exit strategy which hardly anybody looks at, because they're always concerned about what's it going to cost me to get in. It's like, no, you're not going to keep it forever. Everyone always locks in a profit. What's it going to cost you when you get out?
Right.
Because it's going to be a higher price.
That's such a good point. And even just the very first thing you said was extremely cogent. When you go and buy something from a store, if you go to Walmart and you buy something, you're paying extra. You're paying a surplus. You're paying for a lot of different surpluses. It took a lot of ways for that product to get to that store. So you're not paying what the raw price is. So that's a great answer. I hope that when my friend watches this, she will want to diversify a little bit more, because right now I feel so much better having physical gold and silver versus having my money in the bank. Like I said, I don't want to wake up one day and see zeros across my screen, Kirk.
Yeah. I mean, here's the thing. So that's like transactional broker. You make a commission when you buy and when you sell, and you forget about them in between, right? Where we differ additionally is life happens in between those transactions. When you buy something, you have to get into a trend. You sell to get out of a trend, right? I mean, that's normal. But life happens in between those bookends of those transactions. This is where we thrive, is on that relationship piece, because we want lifetime relationships with our clients. So we'll navigate through this with you. We'll let you know when it's time to buy, sell, reallocate, get out of Dodge, do whatever needs to be done, right? We'll let you know. Additionally, we send out weekly video commentary to all of our clients, because if you're in the right place at the right time, that's only half the story. You also have to have financial peace about your decision, right? So every week when we have videos, it's like, this is what I'm seeing politically, economically, this is what you should be careful of, but this is what you can be joyful about, right? That will help to eliminate financial anxiety over time, because you understand why we're doing what we're doing, right? It's a big part of the equation, is right place at the right time, understanding why you're doing what you're doing. So when you put your head down on the pillow at night, you're not thinking, crud, did I do too much or did I do too little? It's like, no, just right. You have to do what's just right for you, right? That's where we come into the equation to help navigate, guide, counsel through this horrible economy that we're faced with. It's like, look, we didn't deal the cards to us, but we have to play the hand that's dealt us, right?
Right.
Well, there's ways that you can win, not just win. I'm not talking about survival in this economy. I'm talking about thriving, because we can thrive. We don't have to just survive.
You don't strike me as a survival kind of guy, just living on that edge.
No, I'm not, because that's a morbid place to be. It's like, no, it's not happy. See, if you don't do anything in this economy, and which fear does that to people. Fear strikes people into inaction, right? And it's like, I'm just going to stick my head in the sand. I'm not going to do anything. I'm just going to wait. Yep. If you do that, you will sink with the ship, and you should be fearful, quite honestly. But if you do something, not just be hearers of the word, but doers, right? There's action that's needed. We can go into things like gold and silver, which thrive during times like this. And so no matter how horrible the economic news looks, almost like the more horrible it is, the better gold and silver perform, right? And so you can have that financial peace, right place, right time, minimize risk, maximize your return. That's what gold and silver bring to the table right now. And that's why I'm shouting it from the rooftops. It's like, look, I could do stocks for people right now, but I won't. It's not that I have a bias in any direction. It's just the only thing that makes sense to me.
You partner with your clients and you help them create a strategy for long-term wealth. It's not just, you call it intergenerational wealth, and you find out what people's hopes and dreams are. And there is a very personal account that you have. When I I'm so used to just going online, or sometimes I used to walk into coin shops years ago and I'd walk out and give them a bunch of cash and I'd walk out with my physical gold and silver. So when I had this experience with you last week, it was different. You called me personally. You asked me how much money there was and what we should get. And you gave me some advice, and it's so different than any other experience I've ever had. And that's how you do it with every client.
Every client we have a personal consultation with. That's free, right? Because you can't use a cookie cutter approach with people. It's like, what if your goals were different than what I thought they were, right? Well, I'm never going to know that until I ask, because I want to help you make sure that the dreams that you have for your own finances are small, because they're actually bigger than what you think they are, right? And we just have to help find that. And we can do that by being in the right place at the right time. How do you grow your portfolio over time? Simple. Minimize risk, maximize return. Because I could potentially maximize your return with cryptocurrencies, right?
Right.
Potentially. But it also comes with maximized risk. I mean, look what's happened to Bitcoin just this year, down 40,000.
Don't remind me.
Yeah, I mean, terrible. That doesn't fit my category, my goal of minimizing risk, maximizing return. Staying in cash, a lot of people think, well, I can minimize risk with that. Well, sure, I guess. You're losing to inflation, but you get zero return on it, right? So that doesn't fit the bill either of minimizing risk, maximizing return. Silver right now, and I hate to sound like this one-hit wonder or one-trick pony, right? It's like silver, right? But it's amazing because it's an asset that's a thing. It's a tangible asset. Tangible assets go up with inflation. But here's the key thing about gold and silver. They're liquid. It's a 45-second phone call to lock in profits, and we wire you the funds. You're in real estate. It's not like when you want to lock in capital on real estate, which is a tangible asset. You have to find a buyer. They have to qualify for it. You have to market it. It's not necessarily 100% liquid.
That's right.
Well, in a raging market, it's like 24 hours liquid. Sometimes it's like, oh my word, you have a cash buyer.
Inventory. Yeah.
Yeah. Or like a Picasso painting, right? Okay. That's something that goes up with inflation, but what good does it do you if you can't sell it? Oh, I got to take it to Sotheby's auction. Some dude with a paddle has to raise it and says that he wants it. And what price is he going to pay? I don't know. So gold and silver are 100% liquid with a 45-second phone call. That's what makes them, I think, the best tangible asset in the world to take advantage of these inflationary pressures, because you can get rid of it when you need it, right? So that's why I like it so much.
Yeah, all that I agree with. And I think people should take advantage and diversify. They don't have to take all of their money and put everything into just silver coins, but get involved. Inaction can be a killer. I mean, I've been frozen and paralyzed with fear about other things in my life. And how many times have we gone, oh, I didn't get involved with the .com industry. I didn't buy GameStop. So now it's almost like you can buy the dip of silver because it's down today. And when I checked, the spot price was like $22.77 just a little while ago. And it was up about 30 a few months ago. So you can take advantage of that. I mean, $8 less now, that's a deal.
That's amazing. I mean, fundamentally, the markets didn't change. Same things that caused its growth back then are the same things that are intact right now. Inflationary pressures, unsustainable debt, political chaos. Boom, all three of them. What we have right now is just 2 steps forward, 1 step back. 2 steps forward, 1 step back, right? Nothing goes straight up, nothing goes straight down. We just have one of those amazing moments where I think one of the best bull markets in this generation. We have a pullback in prices this week or over the last few weeks. I mean, this is awesome. Mm-hmm. So gobble up as much as you can, because it will go up another 2 steps forward, then 1 step back, right? We'll have another pullback probably in a few months. We'll have another one a few months after that, but it's always going to ratchet up with higher prices until fundamentally something changes. Inflation goes away, debt goes away, political chaos goes away. Then it's going to be 2 steps down, 1 step up, 2 steps down, 1 step up, right? But we're going to lock in our profits by that point, and we're not going to be in it. It's not like, I think silver is the greatest thing since sliced bread. It's a tool to protect and preserve what we have, and we're going to ride that trend up. When it's time to get out, we're going to get out.
Excellent advice. That's awesome. Kirk, how can people get a hold of you? I am going to put your information down below.
Yeah, we set up a link for people from your show to come fill out the form. So this is how it would work. Say, oh my word, I just heard you talking on Tara's show. It's like fill out that information. Somebody from my office will give you a call and say, hey, What caused you to want to reach out? What was it they were talking about that piqued your interest, right? Ask you a few questions, get you on our calendar, right? So, and then we just take it from there. We figure out, do you have IRA assets, non-IRA assets, old 401k? What do you have that you want to protect with gold and silver? And we'll take it from there. The other option is to simply just call us, 720-605-3900. That's 720-605-3900. And when you call, just say, Tara sent me, right? So that way we can know where you come from, because I know what I talk about on these shows, right? And it's like, we want to answer people's questions specifically because they're reaching out. People reach out because they have anxiety about something. So this is why, when we know the show you came from, when we know what you're interested in, want to talk about, we want to get every single one of those questions answered on the phone. And hopefully by the time we're done, we have a strategy set in place moving forward to protect and preserve and start melting away that financial anxiety one step at a time.
I think people are going to feel a lot better after they make their first purchase, and they're going to go, wow, I just did something really good.
100%. It always happens that way.
Yeah, I agree. So I'll put the landing page down below. I'll put the phone number down below. Kirk, I really appreciate you being on Sacred Valley today. It was really enlightening talking to you.
It's my pleasure. Thank you so much.
You're more than welcome. I'll see you again, I'm sure.
All righty.
Thanks, everybody. Check out Dr. Kirk Elliott down below and buy yourself some silver and gold, okay? We'll see you guys next time on Sacred Valley Podcast. Have a great week.